On a Tuesday morning in early November 2025, Gazprom announced without warning that it would immediately halt all remaining natural gas flows to Europe through the last functioning pipeline routes, not gradually reducing supplies, not threatening reductions if demands aren't met, just immediate complete cutoff of approximately 15-20 billion cubic meters annually of gas that several European countries, Austria, Hungary, Slovakia, and via transit others, still depended on for heating and power generation as winter approached. Within hours, European natural gas futures prices exploded upward by 30-40% in single day of trading. Not because Europe as a whole depends on this Russian gas anymore. It doesn't, having reduced dependence from 40% in 2021 to roughly 8-10% by late 2025. But because markets understood what Russia just demonstrated, even minimal remaining dependence on Russian energy creates vulnerability that Russia will exploit ruthlessly. And if Russia is willing to cut off remaining customers without warning in November as winter begins, no energy relationship with Russia is stable or reliable. Let me explain what actually happened in early November 2025, because the details reveal both the immediate crisis and the broader implications. Russia didn't cut all gas to Europe. Most flows had already been stopped throughout 2022-2024 due to sanctions, pipeline sabotage, and previous Russian cuts. What Russia cut in November 2025 was the last remaining flows through two routes: gas to Austria via Ukraine transit and gas through Turk Stream to Hungary and potentially Serbia. These remaining flows were only about 15-20 billion cubic meters annually out of the 150+ billion cubic meters Russia used to send to Europe before the Ukraine war. Small percentage. But for the specific countries receiving this gas, Austria getting maybe 40% of supply from Russia, Hungary getting 45% from Russia via Turk Stream, the cutoff created immediate crisis. Austrian gas storage levels in early November 2025 were around 80% full, which sounds comfortable. But with winter heating season starting and Russian supply suddenly zero instead of providing 40% of needs, those storage levels would deplete by January-February 2026 without alternative supplies secured. Austria throughout November 2025 has been scrambling to secure gas from Germany, Italy, and LNG markets to replace Russian flows. Hungary throughout November 2025 faced even more severe crisis because Hungarian government under Orban had maintained closest Russia ties of any EU member, refusing to support many EU sanctions and maintaining energy dependence on Russia despite EU pressure to diversify. When Russia cut flows in November 2025, Hungary discovered that loyalty to Moscow provided zero protection against Russian energy coercion when Moscow decided it served Russian interests. Slovakia, which receives Russian gas via Ukraine transit that Russia cut, faces similar pressures throughout November-December 2025. Storage levels adequate for now, but depleting faster than anticipated, requiring urgent alternative supply arrangements. And here's what made markets panic within hours of the announcement. If Russia cuts gas to remaining customers in November, as winter starts without warning or demands, Russia could do absolutely anything with energy supplies to anyone at any time. Every European country, even those that diversified away from Russian gas, faces risk that Russia could target their energy infrastructure, cut remaining supplies to neighbors, creating contagion effects, or find other ways to weaponize energy. The panic throughout November 2025 reflected realization that energy security in Europe is fundamentally uncertain as long as Russia is willing to use energy as weapon without restraint. Now let me show you what Russia's calculation was in cutting these remaining flows, because understanding Russian strategy reveals why this is part of broader pattern. Russia throughout 2022-2025 has been systematically cutting European gas supplies, Nord Stream sabotage in September 2022, various technical shutdowns of other pipelines, reductions in flows through Ukraine transit. Each cut throughout 2022-2025 served multiple Russian purposes: punish Europe for supporting Ukraine and imposing sanctions, create energy insecurity and economic pain to pressure European populations to demand settlement, demonstrate Russian willingness to endure economic costs to achieve political objectives, and shift Russian gas exports from Europe to Asia, particularly China. The November 2025 cut of remaining flows fits this pattern. Russia eliminated the last leverage that these remaining gas flows provided to Austria, Hungary, and Slovakia, countries that might have advocated for softer approach to Russia within EU in exchange for continued energy supplies. Once flows are cut, Russia has nothing to lose from these countries increasing support for Ukraine or tightening sanctions. The cut also allows Russia to fully pivot gas exports to Asia. Gas that was going to Europe via Ukraine or Turk Stream can potentially be redirected to China via Power of Siberia pipeline or sold as LNG to Asian markets. Russia throughout November-December 2025 has been increasing gas sales to China and decreasing exposure to European market that's proven unreliable from Russian perspective due to sanctions and political hostility. Russian propaganda throughout November 2025 blamed the cuts on European sanctions and hostility, claiming Russia is merely responding to European actions. But timing in November as winter begins and the complete lack of warning suggest Russia is using energy as weapon deliberately to inflict maximum pain. Let me explain what happened to markets within hours of the announcement, because the price moves reveal the panic. European natural gas futures, TTF benchmark, trading at roughly 45 to 50 per megawatt hour in late October 2025, spiked to 65.70 per megawatt hour within hours of Russia's announcement in early November. That's 30-40% increase in single day. Massive move for commodity market. Electricity prices across Europe spiked similarly because natural gas is marginal fuel for power generation in many markets. Austrian and Hungarian electricity prices rose even more sharply, 50% plus in some cases, as markets priced in severe regional shortages. Oil prices globally rose 3 to 5% within hours as energy markets generally moved on fear that Russia was escalating energy warfare that could spread to oil markets. While Russia hasn't cut oil exports, markets worried that European panic over gas could extend to other energy disruptions. European stock markets fell 2 to 3% on the day of announcement as investors worried about economic impacts of energy crisis. Industrial stocks particularly affected, chemicals, steel, manufacturing companies that depend on stable energy supplies. European government bond yields moved erratically as markets debated whether energy crisis would cause inflation, pushing yields higher, or economic contraction requiring central bank intervention, pushing yields lower. The uncertainty itself created volatility. Currency markets saw euro weaken against dollar and other major currencies as energy crisis suggested European economic weakness and potential need for emergency ECB actions. All of this market chaos throughout November 2025, from cutting 15 to 20 billion cubic meters annually, less than 10% of previous European imports from Russia. The panic was disproportionate to actual supply loss because markets understood the broader implications. Russia will weaponize energy without restraint, regardless of existing contracts or relationships. Subscribe to this channel if you want continued coverage of how this energy crisis develops through winter 2025-2026, because mainstream coverage focuses on price moves without explaining the strategic energy warfare happening. Now let me show you what Europe's immediate response has been throughout November-December 2025. Emergency EU energy ministers meeting convened within days of Russian cuts to coordinate response. Decisions included releasing gas from storage faster than planned to cover shortfall, increasing LNG imports from US, Qatar, and other suppliers, maximizing pipeline imports from Norway and Algeria, and implementing energy conservation measures in affected countries. Austria, throughout November-December 2025, has implemented emergency measures, including appeals for voluntary energy conservation, potential rationing schemes for industrial users, and urgent negotiations with Germany and Italy for pipeline gas deliveries. Austrian industry throughout late 2025 faces real risk of production curtailments if severe cold weather hits, and gas supplies prove inadequate. Hungary, throughout November-December 2025, has been in particularly difficult position because Orban government's Russia alignment created political barriers to seeking maximum EU assistance. Other EU members willing to help on humanitarian and stability grounds, but political message to Hungary is, this is what happens when you depend on Russia despite our warnings. Hungarian gas storage throughout late 2025 is being depleted faster than typical winter because Russian flows are zero. Hungary is securing alternative supplies from Austria and other neighbors, but at much higher costs than Russian gas was priced. Hungarian energy prices throughout late 2025 have spiked, creating inflation pressure and economic pain for Hungarian households and businesses. Slovakia, throughout November-December 2025, has activated emergency plans, including increased gas imports from Poland and Czech Republic. Slovak industry is bracing for potential energy rationing if winter is severe. Germany and other large EU members throughout November-December 2025 have been assisting affected countries through gas-sharing agreements and increased deliveries. European solidarity on energy has been tested by November 2025 crisis and generally held, though with political tensions over burden sharing. EU-wide response throughout November-December 2025 has focused on ensuring no member state faces actual shortages that would require rationing for households, even if industrial users face cutbacks. This means diverting gas from storage in countries with surplus to countries with deficit, which creates political complications but has been managed. Let me explain what this means for European energy security going forward beyond immediate winter 2025-2026 crisis. Europe has reduced Russian gas dependence from 40% in 2021 to 8-10% by late 2025. Enormous achievement accomplished through combination of increased LNG imports, increased Norwegian and Algerian pipeline gas, energy conservation, fuel switching from gas to other sources, and demand destruction from high prices. But Russia cutting the last 8 to 10% in November 2025 demonstrates that even minimal dependence creates vulnerability. Europe throughout 2026-2027 will need to complete the divorce from Russian energy entirely, reducing the remaining flows to absolute zero to eliminate any leverage Russia retains. This requires additional LNG import terminal capacity throughout 2026-2027. Multiple terminals are under construction in Germany, Netherlands, Italy, and other countries. When complete, Europe will have LNG import capacity to replace all Russian gas multiple times over. This requires infrastructure connections to ensure gas can flow from import terminals to landlocked countries like Austria, Hungary, Czech Republic, Slovakia that previously depended on pipelines from Russia. Throughout 2026-2027, pipeline connections between Western Europe and Central Eastern Europe need to be expanded to enable west-to-east gas flows, replacing the east-to-west flows that Russia provided. This requires energy storage capacity expansion to buffer against supply disruptions. Europe throughout 2024-2025 has been building storage capacity, and this effort needs to continue through 2026-2027 to provide security buffer. This requires renewable energy and nuclear capacity expansion to reduce gas dependence for power generation. Europe throughout 2024-2025 has been accelerating renewables deployment, but pace needs to increase through 2026-2030 to fully replace gas generation with cleaner alternatives. All of this is achievable but requires sustained investment and political will through 2026-2030. The November 2025 crisis demonstrates the urgency and provides political justification for the investments. Now let me tell you what Russia loses by cutting remaining European gas flows throughout November 2025. Revenue loss is substantial. 15-20 billion cubic meters at European prices is roughly $5 to $8 billion annually in revenue that Russia is forgoing. Russian economy and state budget throughout 2025 are under strain from war costs, sanctions, and economic pressures. Giving up billions in revenue isn't costless for Russia. European market share permanently lost. Once Europe completes infrastructure to replace Russian gas entirely, there's no going back. Russia had 40% of European market in 2021, worth $60-80 billion annually. By 2027, 2028, Russia will have zero European market share, worth zero. This is enormous long-term strategic loss for Russia. Pipeline infrastructure becoming stranded assets. Pipelines from Russia to Europe cost tens of billions to build. If they're not used, they're worthless. Russia, throughout November 2025, is essentially abandoning infrastructure that represented major investments, accepting that sunk costs are gone forever. Reputation as reliable energy supplier destroyed for decades. Russia marketed itself as reliable energy partner even during Cold War. Throughout 2022-2025, Russia has shattered that reputation by weaponizing energy repeatedly. Future customers will demand premiums or alternative security arrangements to deal with Russia, given proven unreliability. These costs are real and substantial. But Russia, throughout November 2025, apparently calculated that strategic benefits of cutting Europe out of energy relationship outweigh economic costs. Russian strategy throughout 2024-2025 has prioritized geopolitical objectives over economic optimization. Let me show you what happens if winter 2025-2026 is severe, because weather could turn crisis into catastrophe. If winter is mild, as in 2023-2024, European gas storage will last through winter despite Russian cuts. Prices will moderate and crisis will be manageable. But if winter is cold, extended periods of below average temperatures in December, February, European gas demand will spike, storage will deplete rapidly, and shortages could materialize in vulnerable countries. Austria, throughout a severe winter, could face industrial rationing or even household conservation mandates if gas supplies prove inadequate. Austrian economy could contract significantly if major industrial users are forced to curtail production. Hungary, throughout severe winter, could face even more serious shortages given higher dependence on Russian gas that was cut. Hungarian energy crisis could become political crisis for Orbán government that failed to diversify despite EU warnings. European gas prices throughout severe winter could spike to 100 plus per megawatt hour, creating inflation pressures and economic pain across continent. High energy costs would feed through to electricity prices, heating costs, and industrial production costs. European politics throughout severe winter could see backlash against leaders who allowed dependence on Russia to persist, or against Russia supporters who advocated softer policies. Energy crisis could reshape political landscapes in multiple countries. Now, let me tell you what I personally think Russia is trying to achieve. Russia, throughout 2022-2025, has been attempting to use energy weapon to break European unity on Ukraine support and sanctions. Each winter, Russia has hoped that energy pain would cause European populations to pressure governments to reduce Ukraine's support and seek accommodation with Russia. Throughout 2022-2025, this strategy has failed. European unity has held despite energy costs. Support for Ukraine has continued. Sanctions have remained in place. European populations throughout multiple winters have endured high energy costs without forcing policy changes Russia wanted. Russia's November 2025 decision to cut remaining gas flows suggests either final attempt to create winter crisis that breaks European will, or recognition that energy weapon isn't working, and Russia might as well fully pivot to Asian markets rather than maintaining European flows that provide minimal revenue and zero political leverage. I believe second explanation is more likely. Russia, throughout November 2025, is accepting that Europe is lost as energy market and customer, and cutting remaining ties to finalize the divorce and redirect resources toward relationships with China and Asia that Russia sees as future. This is strategic loss for Russia masquerading as strategic choice. Russia didn't want to lose European energy market. It happened through combination of Russian aggression, European sanctions, and mutual decisions to end relationship. But by November 2025, Russia is accepting reality and trying to make best of situation by shifting eastward. Russia cuts Europe out of key energy loop in early November 2025 by halting remaining gas flows through Ukraine transit and Turk Stream, totaling 15 to 20 billion cubic meters annually. Markets panic within hours with 30–40% price spike as traders understand Russia will weaponize energy without restraint even in November as winter begins. Europe throughout November-December 2025 manages immediate crisis through storage releases, alternative supplies, and energy sharing, but faces uncertain winter depending on weather severity. Austria, Hungary, and Slovakia particularly vulnerable and scrambling for alternatives. As 2025 ends, the crisis demonstrates both European vulnerability to Russian energy coercion and European resilience in managing repeated shocks. Europe, at 8–10% Russian gas dependence in late 2025, can survive Russian cuts, but not without economic pain and political stress. The trajectory toward zero Russian gas dependence by 2026–2027 is now locked in. Russia's November 2025 cuts eliminated any remaining European argument for maintaining energy relationship with unreliable partner willing to cut supplies without warning as winter begins. Markets panicked, Europe scrambled, Russia cut the last ties, and winter 2025–2026 will determine whether Europe's reduced but remaining Russian gas dependence creates manageable stress or serious crisis that Russia hoped to inflict by cutting flows at strategically chosen moment. The energy loop is cut. The panic was real. And the final divorce between Russian energy and European markets is happening in late 2025, not through negotiated separation, but through Russian decision to sever remaining connections and accept permanent loss of market that was worth tens of billions annually before Russia chose geopolitics over economics.